Hey all, welcome to the second session of a day in life of a fund accounting. So last session we discussed in detail about the fund accounting and we know about where it get used, what are the use and where how what people are using, how investor decisions are important and why fund accounting are important in this. Okay, so we'll moving this session into the third part of this fund accounting is the NAV calculation. So in this NAV calculation we will discuss about the pricing asset, accounting for the liability and adjustment. So NAV calculation is a core function in the fund accounting essential for the investor to understand the value of an investment. So the process involve pricing asset, accounting of liability, making necessary adjustment, and the accuracy is paramount as error can be significantly impact investor confidence and the fund accounting. So it is a very theory part how is important as a part of a practical. So we'll discuss in the practical how this is calculated and how it is impacting to the fund accounting. Start with the fund accounting, then it goes to investor, regulator, auditor, how it get impacted if it's not get correctly calculated. So we create one example on a small basis and then we'll discuss how it is important. Okay, so let's assume today's date is 1st Jan 2025. Okay, the total asset of that fund, you can give the fund name is ABC. Okay, fund name is ABC. I just highlight because this is important and the date also important. So the total asset, I will write the total asset. So total asset, the total asset of that ABC fund as of 1st Jan 2005 is 12 lakh for example. Or we can say the 1 lakh. We taking just small example. You can just include, there will be not 1 lakh, it may be 1 billion or billion. So we are taking a small example. Then total liabilities. Okay, we'll discuss about what are the parts of a liability as well. Total liability is 2 lakh or we can say 20,000. So here 20,000 will be there. Okay, so what is the net is 80,000 is coming. So here not now is ready. So just 80,000 is a net between the total asset and liability. So what things are included in total asset we'll discuss in short. Actually I have a detailed video on this NAV calculation, so I will give this detail in the description box or link to this part. Okay, so the total asset are be the market value of security, cash and cash equivalent, accrued income, okay, and the receivable. Okay, these are the common part of total asset. Just I want to give the box, these are the parts of total asset. Total liability include Total liability include the fund expenses, maybe the fees, maybe the some expenses, electricity expenses, admin expenses, stationery expenses, or maybe anything. It will include small to small, or it include the salary of your employee as well. So expenses, fees, and obligations that need to be paid in future. Okay, accrued expenses as well. Okay, expenses as well, commission payment, commission payment, asset management fee, foreign payments, foreign payments, and statutory statutory dues. So okay, these are included. So assume this 1 lakh are coming from the this all the thing. Okay, I just want to just okay. Okay. So these are the items that comes under the total liability and total asset. Just I am doing the bold structure, creating the box. Okay, so total asset 1 lakh and total liability is 20,000 came. Net is coming this much. So out of the share outstanding means they have purchased this much amount of share of total investment. So share outstanding, so outstanding is, you can give 10,000. Means they have purchased out of this total market value of security, they have purchased 10,000 shares or of different companies. So 10,000 is the outstanding amount. So here also some different calculation will be there. So it's depend on the fund to fund basis. So according to where you are working, so it's depend on this. Okay. So as per the NAV calculation formula, we can see the total asset minus total liability is coming 80,000, and the share outstanding is 10,000. Okay, so if we came to know, our NAV will be coming as a 8. So NAV per share is $8, or if we calculate in rupees, so it is 8. So something how this will be calculated. So next day, if some security get added, if security gets sale, or some profit has been booked or redemption has been booked, accordingly your total asset, total liability will become up and down. So sometime on next day, if you assume that on 2nd of Jan your net asset and net value get changed. Okay, is get changed. So just I am giving the example here. For example, some security gets sale or some security get added. Okay, so accordingly your balance will get changed. Okay, so for example, your total asset will increase by the 1,20,000, or your liability increase with the 40,000. So accordingly your NAV will be checked. So when discussing on the first session we are discussing about maintain the accuracy between the custodian broker. Okay, maintain with the as per your application that you are using, with a client, with a client report as well, and all the reports are coming into your system in your emails. Just check with them, cross verify, and amend it before your NAV get calculated. If your total asset includes some wrong data, or liability includes some wrong data, or some this contain will include the wrong data, so the NAV will not calculate accurately. So that's why this rule is very important. Okay, so this is how all things will be decided. This is short form. If you want in detail about the NAV calculation and all the part, I have a separate session on NAV session that I have already recorded. I will include when I will just upload this video, I will include this all into the description box link. Okay, so now moving to the next part. So next part is the transaction reconciliation, assuring accuracy. So transaction reconciliation is the most important part before the NAV, because reconciliation is the fixing the discrepancy between the counterparties. The counterparties are which, if we are as a doing reconciliation, the counterparty may be your broker, custodian, your client, maybe some other parties are there. So you have to do the reconciliation between them, or where applications are there. So if you find some discrepancy, you have to fix this discrepancy, match the transaction, and all thing will be done. So we'll have some example on the NAV calculation as well, that we will reconciliation as well, that we will discuss. Okay, so just a minute. Okay, so just we'll go one by one. So matching the transaction, if broker and your application is showing the same quantity, same price, same market value, then you can match it off and clear it with your reconciliation. If some discrepancy coming, like for example, like broker has reflected, your client has not reflected. If client has reflected, broker has not reflected. Sometimes this scenario will be, or both are reflected, but still we have a different discrepancy between the quantity, price, and maybe the market value, means the net amount. So then you have to investigate all the reports that you are see in the morning between them, that who is showing the correct, and accordingly you have to reach to the particular team as well. So best practice is implementing control to avoid the error in reconciliation. So reconciliation is a critical process in the fund accounting, ensuring that fund transaction match external record as well. This includes step-by-step process of matching the transaction, identifying and fixing the discrepancy, implementing best practice to avoid error. Okay, so this is a reconciliation. So basically the fund accounting is not just about tracking the investment, it's about ensuring the accuracy, transparency, and compliance. So that's why they are doing each and every check. If there is some discrepancy, so they can caught it out. Okay, so if you go with the general trade life cycle, then the trade start with the broker, the client gives the instruction to the broker. Listen very carefully, this is very important. So if instruction sent to the client, to the broker, to buy certain thing, so at this price, at this much quantity, then instruction, then broker hit into the stock market, and again the stock market, when the both his quantity and price has matched, then again the broker will give to the client that I have buy on this part as a contract note confirmation. Then the client has given confirmation to the broker as affirmation. Then it goes to the level to the custodian part, where the trade get enrichment, the trade get value captured, the trade get we can say validate with the broker. Then it goes to clearing corporation, and it get cleared between the counterparty who is sell and who is buy. Then it goes to the it goes to the reconciliation team. Then our team will be coming. So we are working on the middle office, means middle office. Then the end level also will be different. So mostly we are working on the middle office. The front office is that who are doing the trade on behalf of that. So mostly this all thing will come under the middle office. So sometimes somebody will ask you, your senior, that what process you are doing. So we are doing the middle office process. So this is how the process will work. So that's why I tell you the fund accounting is not just a tracking investment, is all about ensuring accuracy, transparency and compliance. So on each level of a trade life cycle there will be the validation and accuracy has been checked, but however we have to make sure all transactions match. That's where the reconciliation and reporting come into in. Okay, I will take through the process of reconciliation to front transaction, preparing the report for the investor and saying compliant to the regulator. Let's drive in. Okay, how this will be done. Okay, so what is reconciliation and why it is important? So reconciliation is a process of matching the fund transaction with the external record. So fund transaction means your system where you pull the report with the external record means the broker report or the client report. Okay, matching between them, your system with the broker report, match your system with the client report to ensure that everything is accurate. Every investment, trade, dividend and the fees must be verified. Imagine a fund purchase 100,000 share of Apex stock, and the trade should appear in the multiple record, the fund internal system, the broker's report and the custodian statement. If you don't match, something will be get match. Okay, if something you miss to match between this all part, like internal system means your accounting system. So I give the example of the accounting system. There is a Geneva, there is a infusion, this is the name of the application. Geneva is the most prominent, then infusion, then it comes about the Calypso, then it's come about we can say Investran, and there are many more. Aladdin is there, and few organization has their own accounting system where they do the matching between the custodian between their line or client between their line. So this is how all thing work. Okay, matching of the transaction. Okay, so this will be done. So if for assume if reconciliation is not done properly, fund could report incorrect valuation which can mislead investor and even result to regulatory fine as well. If you do something differently, so it may be the compliance to same team, why it's not captured before. Okay. Okay, so there are certain important steps of reconciliation. How reconciliation has been done, we'll discuss in the Excel file. So most of the important thing I'm writing in the Excel file, because at any point of time if you can not listen this properly, so you can go this recording and just pause it out and prepare your notes as well. Okay, so reconciliations process. Okay, so I'm writing here step 1. So step 1 is start with the gather internal fund data. Okay, so gather internal fund data means we can say the collect the trade record, cash balance and fund holding. Okay, collect means as per their system what is a trade record will be there for particular fund. Okay, cash balance and fund holding. Okay, steps 2 will be obtain external record. External record means broker and custodian reports. Okay, obtain external reports. Okay, so here get data from broker, custodian and the bank statement. Okay, then the step 3 will be compare and identify the description. So internal record and external report, you have to do the comparison. Compare and identify discrepancy as well. So where it get discrepant, at broker level, at your level, or maybe the some technical issue, so you have to identify. Okay, so cross check fund transaction, against external report. Okay, step 4, investigate and resolve the break as well. Investigate and resolve issue. So if you identify the where it is discrepancy, so if it is controllable, then you can do. If so is controllable, then you can do, like mismatch between the broker and your application, or maybe something like some technical issue, then you raise the ticket and you resolve, or something like broker is not giving in the correct format, then you can internally resolve it. So it's come under investigate and resolve. If not, then you have to escalate to the broker or who are the responsible as per the fund. Okay, so different organization have different escalation point, so accordingly you have to follow. Finalize and approve reconciliation. When you done the reconciliation, so some organizations, some applications are there where you done the reconciliation, then you have to approve with your supervisor that reconciliation done, please approve it, and then you have to extract the report of a reconciliation and submit to the client. So that's also part of a finalize and approve. Is come and submit the correct data from the fund valuation reporting. Okay, so this is done. So if example we want to see of a reconciliation error, so let's say hedge fund invests 2 billion in Tesla stock, but when checking to the custodian report, the transaction only reflect 1.8 billion. So what was wrong? So here the transaction has made in hedge fund is 2 million, but in the broker report or custodian report is showing 1.8 billion. So responsible reason may be the broker recorded the wrong trade amount. Okay, sometimes the broker is recording wrong. The foreign exchange fee was deducted but not recorded. Yes, if your country is India and you invest into the US market, so then the exchange rate is for that day is 1 point something, but is recorded with some different rate. So sometimes so discrepancy may become, and the manual entry error as well. Sometimes the typo error will be there, they want to type some different stock some different amount, but amount get typo error. So this may be the reason. The reason may be also like that tax has been included, this also may be reason. To resolve this, we have to connect with the broker, confirm the trade detail and adjust the record accordingly without the proper reconciliation. Such error should impact the NAV and investor return as well. So this is how thing will be done. Some more parts that is something is creating the comprehensive report for the investor. When your reconciliation is done, once the reconciliation is complete, the next step is preparing report for investor. This report must clear, accurate and transparent as well. Sometimes the investor as there means the client is there, they want some report into some format, like they want this in this column, they want this field in this column. So you have to format the report after approving with your senior. You have to format the report accordingly. So they want different report at EOD, at their deadline time. They have decided some deadline time. So key component of investment report are the fund performance summary, so returns, growth and trend they want to see. So some will prepare the graph accordingly, they will show the NAV report, the latest NAV asset as well. They want expenses breakout as well, so whatever the expenses they have done and time of a sign off in day. Market commentaries or insight of fund strategy and future outlook as well. So this report helps investors to make informed decision about the portfolio in going forward, like they want to invest in some particular field. So if they want to check sector wise how they invested, if sector is overburden or not, like they want to invest 25% of this sector but now the investment come to 50%. So this is the risk part as well. So they check sector wise, country wise as well. They will check base of the group as well, like sector under the in the sector there are some group will be there. Okay, so accordingly they check. So this report is very important. So the next part is the compliance and regulatory also come into reconciliation. So when I'm talking about in first session I talking about some regulatory are there, like in India the commercial bank are controlled by the RBI. RBI will decide the all the thing about the commercial bank. In the part of a hedge fund, mutual fund or maybe the private equity, real estate fund accounting, there are some regulatories. Okay, the regulatory as the IFRS and gap something. So who is decide each and everything about this. So they mention clauses about the investment, they maintain the clauses about the investor, they maintain the clauses about the returns, everything they have mentioned. So regulatory finish submitting the report to the authority like IFRS and gap and audit readiness as well. They also check the AML and KYC as well. So this is one. If fund not comply with the regulator, they can face heavy penalties, legal action, loss of investor trust as well. So what you are doing in your organization, this is just you are matching, you are commenting, you are reaching to the broker, but next part is something that reports goes to everywhere. Okay, so when you are doing the reconciliation, do with very serious, because if something get missed, it's coming to the company and coming to the company reputation as well. Okay, so some common mistakes and bad practice that I want to decide. Even a small mistake in reconciliation reporting can lead to the big consequences. Here are the most common consequences: incorrect data entry, misplacing decimal point or the number is come under typo error, where the incorrect entry has been come through the some uh, different source and you match it out, or some decimal are not put at a correct level, so it may numbers maybe get done. Delay reconciliation, letting issue pile up over time. So delay reconciliation, keeping your break from the long time, not resolving, not escalating to the concerned team, maybe also impact on your reconciliation and further part as well. Ignoring small discrepancy, like some discrepancy is there with some dollar or something, but every time you are ignoring, so now it comes to the at a dead level. Lack of proper documentation, no audit trail may difference, some documentation is not there. Okay, so there are maybe reconciliation. So here are the some common thing, and here is and how to maintain the accuracy in reconciliation. Daily, weekly reconciliation, don't wait until the last minute, do the reconciliation daily. And if you find, if you get a time, extra time, you can investigate the old age back as well and maintain the accuracy in your reconciliation. Use the automated system, reduce the manual work. some automations has been going on in the field of various fund accounting and reconciliation. So you can use that tool to maintain reduce the manual work and give the accurate data within less time to maintain the deadline as well. Okay, so reconciliation reporting are the backbone of a fund accounting. They ensure accuracy, protect investor, keep fund compliant and the regulation as well. So that's how the reconciliation is important. So anyhow, we are done with this reconciliation part. So now the next important part is investor allocation and equalization. So this is also an important part and part of a private equity, because in private equity we can see the investor allocation is important because they raise the money in some batches or some classes, because they at initial time they did not get a full money, so they get a 50% money, 40% money, and they start the fund. After 6 months new investor join. So this is how the scenario will be for the private equity. Okay, so let's discuss in detail how this is work. Okay, so equalization is investor flow process new investment into the fund. Equalization adjusting allocation to fair treatment of all the investment. Like for example, investor on joined the private equity firm 6 months before, and the 6 months before new investor joined. But when getting the returns, when distributing the profit to the investor A and B who has joined in the time difference of 6 months, so getting the equal amount of profit is not possible, because the first investor before 6 months, so he get a most priority. So when the new investor joined, that time only the equalization has been done, and investor allocation and equalization are essential for managing the fund investment fairly. This involve processing investor inflow, adjusting allocation, and equitable treatment, handling all the thing. Okay, so we'll take about how the equalization has been adjusted before some investor came to the firm that I am not getting the fair returns as I joined before, and the new joiner has joined after 6 months, new investor joined after 6 months. So we should do the fair allocation. So compliance has been not come, so that reason the equalization has been done. So how the equalization get processed, we'll discuss. Okay, so for example, a fund ABC, we'll take again the fund ABC. Okay, and the first closing for ABC is 1st Jan 2025. Okay, the amount of it 10 million. Okay, and the total commitment is 20 million. Means total the fund need total commitment is 20 million, but they raise in the first closing 10 million only. Okay, total fund commitment is 20 million. Okay, so this is how so for example, early investor, this is a case of a early investor who came early in this fund. Okay, early investor. Now the second closing happen on 1st July 2025. Okay, with 10 million, because the fund total commitment is so it is a we can see the late close, or we can see the late investor. Okay, why I'm writing this name? Because this term will be used. Okay, so that's why I'm writing here terms as well. Okay, so here 10 million is done, total commitment is done. Okay, so compensation has goes to so for example, on this 6 month gap they have invested into some particular bond or something, so they generate an interest, and they have invested in some stocks, so they get return on investment as well. Okay, return on investment as well. Okay, so for example, they have gain around 10% on 10. Okay, so it's coming 1 million they have gain. Okay, okay, so 1 million they have gain on only 10 in 6 months, only on 10 million. I write here only on 10 million in 6 months. Okay, they have gained 1 million. So new partner joined on 1st July, and 6 months when he joined, the fund get returned to 1 million. So question is here, uh, if he joined, so he will not get a return of a 1 million, because he joined at a time when 6 months later, and before only this early investor has right to get a 1 million. Okay, so when new million, so before so total fund valuation come to the 20 million. Okay, and 1 million after July, 1st July, the total fund valuation 2025 okay, 025, the total fund valuation came to 20 million, and 1 million they have gained as a return. Okay, so when distributing this 1 million to both investor is not possible, because this joined late, but early joiner has a full right of 1 million. So when A join, so when this second investor join, so second investor give 1 million to the first early investor to make the equalization. Like for example, if he invested before 6 months, so he has a full right of a return of 1 million. So when second investor join, so he give 1 million to the directly to the first investor to make this fund equalization. Means in other terms we can say, in future if this fund get a return after 6 months again, like in 2026 this fund get 2 million return, so 1 million each investor can get, because before only the second investor submitted 1 million to the first early investor. So that's why the fund get equalized on the 1st July 2025 itself. So whatever the return in future they get, like from dividend, interest, or maybe the fund get closed, so equal distribution has been done between the early and late investor, because in July itself the second investor net off his all the things to the first investor to giving a return, and the fund investor came to the equalization. So this is how equalization work around us. So I have a separate video on equalization as well. I will attach this link in this video session as well. Thank you so much for watching this. We have to cover some other part as well. We'll cover in the next session. So thank you so much for watching. We'll shortly load the third session as well. It is the last session for the a day in the life of fund accounting. So thank you so much for watching. We'll meet you on the next video.